All right, so I'm going to show you how to use IFVG, inversion fair value gap, to take trades on gold. How to use inversion fair value gap to take trades on gold. So make sure you subscribe to our channel to support. Okay, let us start. Here on this market structure. It was last week on gold. We have this market structure. See, we have that liquidity is already swept. Also on left side, you can see very well, carefully, you can recognize there is fair value gap here. So price, it swept liquidity, also reacted from what? Fair value gap. And also on this top, on this point here, you can see creation of IFVG. There is creation of IFVG. So let us play a little. There is creation of IFVG. Same. There is creation of that IFVG. Previously, there was fair value gap is already broken by bearish move. You can see also on bearish move, FVG created. So we get something we call it as IFVG, inversion fair value gap. So the major factor here is that liquidity sweep and creation of that FVG will get a better setup on gold. So now we're supposed to wait retracement. We're supposed to wait retracement to that inversion fair value gap, and then we'll take short position. So when we take a short position, where it will be our target. Our target will target this point of interest or support area or point of interest that may lead the price to create a pullback. Okay, here you have that order block. Also, there is another order block here. Also, we have another liquidity level here. You can see that is sell side liquidity. Okay, so we have multiple point of interest here. So in first point of interest, we can place taking profit number one. And then on second point of interest, we can press taking profit number two. On the second point of interest, also on liquidity zone, we can place our final TP on liquidity zone. So here on liquidity, on that sell liquidity, for swing low, we'll place our final TP. So expect when price approach that areas, when price approach these areas, may the trace back and then continuation. When it reaches this area, it may create a pullback and then continuation. And when it's take out this previous low, it may create a market shifty for buys later. Okay, so that's why we are using those point of interest as what? As our taking profit zones, because price may react from that areas. Okay, so now we are going to wait retracement. We are going to wait retracement to that IFVG, and then our stop loss will be on that swing high here, and then our final TP, it will be here. Final TP, it will be here on this swing low. Okay, that is very clear way of using IFVG, inversion value gap. Okay, inversion or inverted. Okay, so let us play out to see what will happen. Let's play. Let's increase speed. Entry activated. As you see, entry activated on that inversion fair value gap. Entry activated clearly, and you can see price created low volatility. There's a lot of candlestick with low volatility, and it is 1 hour. So we have to be patient enough to hold this price, to hold this entry. You're supposed to be patient enough to hold this entry. So let us see. Already TP number one hitted, so I supposed to set a break even, collect the partial when your TP number one hitted. I hope you are aware about how to take partial profit. And when you open multiple position, you have to close some position. When you open one big lot, one position, you have to cut some partial profits by closing a few lot size. Okay, so let's see. Okay, let's see how TP number two hit successfully. You can see when TP number one hit, it created a pullback. When TP number two hit, no pullback. Let's see. Let's see. Okay. TP number two hit and price created that pullback. You see, price created that pullback after TP number two. Price created that pullback after TP number two, and we're supposed to hold this price. That is Friday price movement last week, and you can see price succeeded to reach our TP area like that. You see? So that is it. That is it. That is clear way of using inversion fair value gap. Wait liquidity sweep, wait formation of that inversion fair value gap, and then you can execute your trades confidently. Also, after liquidity sweep, you can wait market shift, structural market shift when there is not any IFG on that market structure. You can use structural market shifty or Ifvg to enter your trades. Let me show you how we execute the trade. You can see that is last week. You can see this short position on gold executed from where? From that area, from this Ifvg area. You can see I was too late, just a little to enter, but executed. You can see this movement, very crazy movement, a lot of pips in profit until Friday. So that is clear way of using Ifvg on trading gold. Clear way of using Ifvg on trading gold. All right, so make sure you hit subscribe button for next videos. So let me show you 4-hour time frame. On 4-hour time frame, that is view. That is view on 4-hour time frame. Gold the last week. That is view on 4-hour time frame. After that liquidity sweep, talk about after this liquidity sweep here, executed here, you can see it approached this previous low. Price approached this previous low here. Okay, so that is it. That is clear way of using what? Ifvg on trading gold. Very simple and clear. So when you enter, you can target liquidity area. So it is, if it is sell side liquidity, you can target buy side liquidity. And vice versa is true. So that is it. See you on next episode.